Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Ian Ippolito. Thanks for being on the show, Ian.
Yeah, thanks, Whitney. Great to be here.
Yeah, Ian is a serial entrepreneur and creator of the investment analysis website called the Real Estate Crowdfunding Review.com. Also, the founder of a private investor club for alternative investing with over 1,300 members and over $1.35 billion in investable assets. He's been awarded the Incorporated 5,000 Fastest Growing Private Company Award 4 years in a row and named to the 100 Most Innovative and Brilliant Companies by Entrepreneur Magazine. Well, that sounds very impressive, Ian.
Well, thank you. I appreciate it.
That's awesome. So, tell the listeners a little more about your background and what some of that means and what you're doing now.
Sure. So actually, really, before I got into syndications and all that, I was a serial entrepreneur, tech entrepreneur. So I created a whole bunch of businesses, some more successful than others, but I was fortunate enough to have a pretty successful company that I exited from in 2013, tech company. And then at that point, my job became managing this money, basically. I didn't have like a normal job that, people would have to bring in income. So really was depending on my investments. And that was 2013. I started learning about alternative investing because I wasn't super great about just throwing all my money in the stock market, like what people would be recommending at the time. And started looking at things like alternative lending, like lending club and things like that. And it was okay, stuff that was okay. In the end, I ended up pulling all my money out of it eventually, because then I found something better, which was the real estate and some of the other alternative financing and some of the debt and equity investments. And I ended up creating a website called the Real Estate Crowdfunding Review, just based on, because I went through about 100 different sites and I wrote down what I liked, what I didn't like. I interviewed people about them, said, how was your experience? And after creating that, so many people wanted to get the information that, I was emailing it to people. And I said, what, I'll just put it up on a website. So that became the start of the website. And then that just grew. And then eventually I created the private investor club behind it, where we could kind of talk about these new deals. It's like, hey, I found this new deal. It's hard to get good new deals. So here's this new deal that came in, here's the information. And then we would discuss and say, hey, maybe this matches me, or maybe this matches you better, because everyone comes from a different place and, everyone has different criteria.
Nice. So, why don't you tell us a little more about, like what this private investor club is? Really, I like how you've done that and you've called it that. And I think it does lots of things psychologically to investors. They feel like they're in this private group, right?
Yes.
But would you just elaborate on just what that is and why you created that?
Well, so originally I had the Real Estate Crowdfunding Review, and what I found is you can't be completely straightforward and honest about things on the internet, because you can get yourself in trouble. I was, threatened with lawsuits for some of the things that were out there. So you can't, if anything is a little bit negative and true, you can get into trouble. So I thought, what, I need to create an area, a safe space, basically, for people to discuss things honestly. And everyone would sign an NDA to say they wouldn't disclose it. Would weed out maybe some of the people who would be providing conflicting information, people that had conflicts of interest and stuff like that, so that people could really trust, hey, when someone tells me, hey, I like this investment, they really could believe that they are not, they don't have an ulterior motive. Nice. So yeah, so that's basically what the end. So it was this kind of safe place for people to talk about it. And it was just a small thing at first, and it just kind of grew and grew. And I mean, it's really only a year and a half old. And, even actually the stats you have are out of date. I think last time I looked, now it's 1,800 investors. So it's just growing like crazy.
Wow. So, I like how you said, you created this safe place where people can discuss these opportunities, right? And then, but, you said you make them sign something to, I know what that is, but would you elaborate on why they need to do that and what that is?
Sure. Okay. So a lot of times we're really digging deep into these deals, and we're like, hey, sponsor, this sounds great, but I'd like to get more information. And they're like, well, I'll give you this information, but I need to make sure it's not going to be distributed out across the internet. So we tell them, okay, well, everyone in our club has signed a non-disclosure. And what that means is if you give us the information, we're not going to share it with anybody else. So you don't have to worry about it being published elsewhere. It's going to be kept private. The exception is that we each have the right to show our financial advisors, so if you have a financial advisor, I can say, here's what's going on. If you have an attorney, you can show it to that, and you can show it to an accountant. But beyond that, it's like, can't distribute it. So that's what allows it to become a safe space for these sponsors and platforms to share the information with us that we need to be able to figure out if we want to invest in deals or not.
Wow. So how are you growing this group? How have you, increased awareness, to get investors in this group?
Honestly, it's just been by word of mouth. So I do have the Real Estate Crowdfunding review where people kind of read my writing, and I tend to be a bit of I'm a conservative investor. So I think people that resonate with that, kind of read the site and they're like, oh, this is interesting. And then they say, oh, well, there's this club. Let me apply and see if I can get in. And so that's where a lot come. But also a lot are just like, hey, my brother's in the club, or my dad's in the club, or, my business partner, and they just refer.
Nice. So, I guess, can you elaborate on just really the functions of, okay, you find a deal and you put it out to the group, kind of what that looks like in the process?
Okay, so there's a bunch of ways that can work, but typically it's like someone says, hey, I was approached by this sponsor. I received this in the mail, or maybe I got a phone call, or whatever it was. And this looks interesting to me. A lot of times people are like, but I have no idea how to evaluate it, So what do you guys think? So they put it out there. And then, there's a lot of people in this club, a lot of people with all sorts of different expertise. Maybe, and it's not just real estate syndication. Some of these are in pretty esoteric things, like it might be litigation finance or life settlement or all sorts of different deals. So, but there's always somebody that knows, about it. So someone that knows something about it will say, well, you know what? Here's what I think. I think the risks are this, 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 and this. And I think the advantages are this, 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 and this. I think what's really good about the club is that it's always about hey, this is from my perspective. And, I have a certain risk tolerance. It might be different than you. I'm not going to tell you what's right for you, but here's the information. Here's what I think. And then everyone makes up their own mind on, what makes sense to them.
So at first I was thinking it was a place really, for you to put out deals to these investors, but which I'm sure that helps also, or is part of it. But from what you just said, so investors can also bring deals into the group, where everybody can just discuss, many different types of investments.
Yeah, that's exactly it. So anyone does. So yes, I do bring in a lot on my own just because I'm always networking and asking people, hey, what did you invest in? Is this good? Did you like it? But the power of the group is just that there's so many people bringing in all these deals, and it's hard to find good deals these days. So it's a really nice thing.
So what kind of deal criteria, do you have as far as before you're going to put a deal out in the group? And at that time, does the members of the group know that okay, you're raising capital for this deal, or is this just tell me your thoughts on this? And you
Sure.
put it
There's
out.
kind of stages that it goes through. At first, it's just kind of hey, there's this interesting deal out here. Does this look any good? And honestly, 90% of them die at that stage because someone writes something or well, did you notice this? Or did you know? And they're like, okay, yeah, I'm not interested in that at all. So the vast majority kind of just die at a very early stage. But the ones that survive then go on to where, hey, a bunch of people that we kind of poke at it and it's oh, it looks pretty good. Then people are like, well, you know what? Can we, let's talk to the sponsor. Let's see if maybe if we were able to aggregate some funds together, they might give us, some special terms or something. Maybe they might lower their hurdle or raise their hurdle for us so we get a little bit more money, or maybe they might change their fees, or maybe they might lower their minimum. That's a big thing too. A lot of times the minimums are too high. So, so we kind of we'll do then is say, okay, let's do a roll call. Let's see how many people are interested in this. I understand you haven't looked at it totally, but how much do we have here? Do we have 10 people? Do we have $1 million? Do we have $2 million? Do we have $5 million? What do we have? And then once I have that number, I take it to the sponsor and say, hey, look, we've got this kind of interest. Will you work with us? And 90% of them will work with us and do something. So then at that point, then it's time to do the real due diligence. So then we'll we will be everything down to background checks and all that sort of stuff. But once we're ready to go, everyone's making their own decision individually, obviously, but as a club, two things happen. Either people are going to invest individually into the deal, and so they'll just go directly to the sponsor, or some sponsors want us to kind of aggregate our money together into an SPV. And then so in that case, then a feeder or whatever is created, and then that makes one investment to the sponsor. So it just kind of depends on what they want and what happens.
So I think it's neat too. So you all can, you're going to put your money together, determine how much you have, so you can really negotiate a better deal or better terms, for the group.
Yes, exactly. So it's a very powerful thing.
So you mentioned an SPD, is that correct?
Or SPV, so special
SPV.
purpose vehicle. Yes, it's an LLC that's created. You could call it like a feeder or a special entity, but it's basically, rather than say we're going to bring 50 people into a fund, rather than them taking 50 little individual investments, we'll put them all together into a fund, and then that's one investment that goes to them. Some people, that's what they want.
Who is Vinnie Smile Chopra? Came to the U.S. from India with $7 in his pocket, and today he has created a portfolio of over $200 million in commercial real estate. He's a CEO of 5 companies, acquiring and managing diverse multifamily portfolio of 3,500 units, and his team self-manage all the assets. Vinnie has walked the walk with over 26 successful syndications during multiple economic cycles, including downturns over 12 years. He has built a very extensive educational academy to teach and mentor investors. Vinnie, tell us about this Multifamily Syndication Academy.
Thank you, Whitney. Thank you so much. I'm really proud to really talk to everybody about this extensive multifamily academy that teaches new and sophisticated investors how to use other people's money through syndications. That has been my world, to buy apartments from 50 units to 500 units, and how to select emerging markets, how to do deal analyzing, investor education, other people money, syndication blueprints. Everything I have learned, I teach in this academy, and over 500 lectures, and also how to manage the assets also, and along with lots of great templates and PowerPoints, everything. And I personally also mastermind coach all my students every Wednesday. So to reach me, Whitney, all the students have to, or investors have to, just text the word learn, 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 to 474747, or call my team at 925-766-3518.
So, and then you can invest in a larger syndication through that SPV?
Yes,
right?
exactly. Yeah.
The whole group can.
Yep, the whole group can do it. And what it allows us to do a lot of times, like, let's say that the syndication has like a $300,000 minimum, and maybe the typical investor only wants $25,000 to put in. So they can keep their high minimum, but in our little fund, we've got a lower minimum. And so we get all of our investors aggregated, and then we just give them one check.
So what kind of, I guess, legal issues should we be worried about? I mean, I know you're not an attorney. Maybe you are. I'm not sure.
Yeah. No, I'm not.
What should we be thinking about when we're thinking, oh, wait a minute. Okay. So I could pull, numerous people together and we could put our money together and, yes. So, I mean, we're kind of creating our own fund, right? And so what does that look like? And
there's a lot of legal issues. So like if someone's thinking of doing it, I would say you have to talk to a good attorney, because there's lots of ways to do it wrong and get yourself into trouble. And I mean, more than you could even talk about, it would take hours to talk about all the things to be done correctly. But go to a good attorney. They will draw up all the documents. They'll work with you. I mean, it probably cost about, anywhere from about 30. It's not cheap. It might cost about $30,000 or $40,000 the first time to draw one up. But if you want the opposite way of that is like, if you don't do that, then you could easily get yourself into trouble. I mean, you could go to jail. I mean, really.
Yeah.
So
so you're really creating your own fund, your own. I mean, it's almost your own syndication in addition, because you got your own PPMs and everything, right?
Yes. Yeah. Exactly.
Yes.
Exactly.
That's what I thought.
Mm-hmm.
Okay. Yeah. I just wanted to make sure we discussed that.
Yes.
But as far as like vetting the sponsor, are you finding now that you're going back to a lot of the same sponsors, or are you taking new sponsors, and how do you find how do you know that there's a sponsor that you want to work with? What's the criteria that they need?
Sure. So the first part of your question, it's both. So it's like, on one hand, there are kind of like favorites where there's this sponsor that the club has invested a lot in the past, and all of a sudden they have a new deal. Everyone's like, okay, everyone gets really excited. So, and we don't assume that the new deal is good. We still do the same due diligence, but we have a high confidence that, this is probably going to be a good deal. So that does happen. But we also have brand new sponsors coming in all the time. One thing I ran into, for example, last year with my own portfolio is I invested so much in this one sponsor that my portfolio was kind of getting out of whack, and my balance and my diversification. So, I think it's a good idea to kind of spread it out over multiple sponsors. So as far as the criteria, it depends on the investor. So the group tends to skew more conservative than most. So, I'm also very conservative. So for me, I want to see considerable sponsor experience. I want to see how they've done in a downturn and that they didn't explode spectacularly. I want to see that they're managing risk appropriately. I want to see appropriate fees. I want to see that they have skin in the game, meaning that they are putting in their money along with the investor. Now, these are things that if someone is more aggressive, they may not put that much weight into. For example, the skin in the game. What that is that mitigates the risk. Okay, so most sponsors are compensated with a promote structure, where they get a certain amount after a preferred return. And the thing with that is just that after a certain amount, it actually encourages them to push the risk envelope because they're getting a disproportionate amount of the profit, which is fine, but just understanding what's going on. So as a conservative investor, I want to see skin in the game to mitigate that. Now, if I was a very aggressive investor, I actually don't want skin in the game because I want them pushing the risk envelope. So, so I can't really say that there's one criteria that we say, when we do deals, we're like, well, here's what I think, here's where I'm coming from, but you might feel differently because you're coming from a different place.
Now, and I think too, it shows some alignment of interest, when they're investing in the deal alongside the investors or the LPs.
For sure.
So, any other, I guess, criteria that I guess the question I also get, people, I talk to so many people almost every day that are trying to get into this business that are, maybe they've had other successful businesses, but now they're pursuing real estate as a syndication business, or maybe they've even been, had a successful syndication business, say over the last 4 or 5 years. However, they haven't been through a downturn yet. Right. And so they say, well, I can't help that I haven't been through a downturn. And so, is that still somebody that somebody like yourself is going to look into, or is that an immediate, no, I'm sorry?
Sometimes it is an immediate no. I mean, I hate to say that, but it is. It also depends on the asset class because, for example, if it's something where there are 100 other, say it's value-added multifamily. I mean, honestly, there are more than 100 that are coming across my desk every month. So if I see someone that doesn't have what I'm looking for, then it's there's really no incentive for me to go for it. So I hate to be kind of harsh, but then again, so let's say mobile home parks, there's not that many sponsors that are out there that are doing it. So then I relax my criteria because it just depends. And I should also say that's just me. I'm very conservative. There's others in the club who will be like, you know what? I like the deal. I like the sponsor, even though they don't have that experience. I'm willing to overlook the fact that, they've never been through a downturn. So it all depends.
No, I appreciate that. Just lay it out there like it is.
Yeah.
So, what's been the hardest part of the syndication process for you, Ian?
The hardest part? Well, I'd say the most painful part is just that every single syndication that you actually get to the point where it's good, you have to wade through those documents. And, it'll be 99 pages, 150 pages, 200 pages. And every single one of, there's potential gotchas in every single line of every page. You have to read every single one. So for me, that's the most painful part where it's I got to go in and read it, but there's no alternative. So I guess the only good thing is that actually, for me anyway, maybe I might see 100 deals coming in a month, but I'm only going to go through the PPMs of maybe a couple in a month. So it's not the end of the world.
What's one way that you've recently improved your business that we could all apply to ours?
Well, you know what? I'd say, because the club grows so much through word of mouth. And so, someone that is looking to increase their business through word of mouth, I think a big part of that is that you have to be willing to give away a lot for free, basically. And doing that takes a lot of time and it takes a lot of effort and it doesn't have immediate payoff. So, so I think a lot of times people tend to skip it. You're so busy. You've got a million other things to do. Let me focus on these clients that are bringing in my money and, blah, blah, blah. But I think actually if a person has enough time that they can think long-term, spending time, for example, doing just free investor education. I see some sponsors doing, I think it's wonderful. They'll sponsor, maybe their hard money loan fund, and that's what they syndicate. And they will have like a thing that says, let me just teach people in general what this asset class is about. I'm not going to push my thing. It's going to be very low pressure and stuff like that. And I see them building the same kind of loyalty and kind of deal flow that way. So that's what I would recommend.
Yeah, I like that. And do you have the time, enough time to think long term? I appreciate you, talking to that, thinking long term and understanding that there's no immediate payout,
Yes.
but it's a long term game. So, what would you say is the number one thing that's contributed to your success?
Oh gosh, well for me, I mean, people get to success in a lot of different ways. For me, it has always just been hammering at it slowly day after day, because I'm not a person that experienced, that the massive success that some people were just like overnight, they became so successful. For me, it's always been hard work, and I've always had to overcome lots of obstacles, and I made lots of mistakes. So, so for me, really the biggest ability was like when something knocks me down, I have to get back up again. And it's just been, it knocks me back down, and then I'll just methodically try to work on it a little bit more every single day. And so that's what's worked for me.
Is there a way that you've stayed motivated, especially first getting started, or the way that you constantly educated yourself, or something about a daily routine that you could recommend to everybody?
Yeah, there's a bunch of things that I found. One is really counterintuitive, and I read it in a book. Because, okay, so you're trying to get started, or maybe just trying to manage what's going on. There's a million different things that you got to like manage, and you've got things coming in from every direction, and which one do you prioritize and what's important? And what I found is that over time, I start with like a list of things I don't have time to get to, and the list gets longer and longer and longer and longer. And then eventually it's like, oh my gosh, I don't even want to look at the list. So I read this book, which was very, and I can't remember the name of the book, unfortunately, but basically the suggestion in the book was that every day, the first thing, not even like wait, you do first thing, you go to your list and you pick the one hardest thing on it, just one, and you just basically do it. It's called eating a frog every day is the idea. And I thought, wow, that's pretty challenging, but I tried it. Eat the frog every day. So go to the list, pick the hardest thing that I've been putting off for usually it's the thing I've been putting off the longest amount of time. And what it does, it actually is amazing. One, it takes up a whole bunch of your day. There's no doubt about it, which is the reason why it's sitting there on my list and I don't want to get to it. But first of all, getting it off the list, the stress that it takes off mentally and everything like that frees me up so creatively, where I can start thinking about solutions to other things. Where before, I didn't realize it, but each one of them has like a mental weight that is weighing on me. And by just getting rid of that, all of a sudden it's like, whoa, the other ones are going so much easier. So I found, so while it's very challenging to do, it's like, it's excellent. So if people can pull that off, I think it's wonderful.
No, I think that's great advice. Make the list at least, right?
Yes, that's true. Start with that.
So what's something you're excited about in your business right now or for the future?
I mean, I'm excited about everything. So, real estate, for example, is growing and changing so much. We got this crowdfunding, we got the syndications. It's opening it up to people who never had access to it before. And I'm interested right now in all this alternative stuff. So it's not just real estate, but like I said, some of those other things, which are all exploding. Again, were never available to people before. So I'm excited for my own portfolio. I'm excited for what it means. And maybe, I don't want to say I'm excited about this, but I am looking at it as an opportunity, because it would seem strange to say you're excited about it. But I do think that we are late in the economic cycle, and I think there is going to be a downturn. I don't know if it's going to be severe. I don't know if it's going to be light, but I'm positioning myself just in case it is severe, and I'm saving up cash and, getting in position so that if it is a severe downturn, I want to be like these people that I've heard about, in 2007 and 2008, who just swooped in there and they picked up once in a lifetime, deals. Well, maybe it's not once in a lifetime, but, at least once in a decade and a half. And so I don't want to say I'm excited about it because, obviously a bunch of people are going to be in pain, to do that. But I am anticipating it. And whether it comes true or not, I don't know. We may end up having a very small downturn and I'll be like, wow, I could have deployed all that cash and I didn't. But, we'll see.
Is there a need in your business right now that you'd like to put out to the listeners?
I can't think of a need, but we can always use more club members. So, if people are interested, check it out. It's forum.therealestatecrowdfundingreview.com. And, we would love to have more people.
Awesome. And how do you like to give back?
So, basically I give back by, hopefully I'm following my own advice that I kind of gave earlier, which is just, I volunteer my time and I give a lot of free stuff. Honestly, 99% of the deals on the club, I'm never going to invest in myself, but other people might be interested in it. So I will take the time. It takes a long time to look at a deal and figure out what the risks are and stuff like that. But at this point anyway in the club, I'm able to go into almost every one and lay out what I think. I know it'll get to the point eventually where I can't do that, but so far I'm able to do that. So I just kind of like volunteer my expertise and my point of view, and I give that to people, and I provide the Real Estate Crowdfunding Review where I put out my free advice and my free thoughts and stuff like that. I don't want to call it advice; it's just my opinions on things. So hopefully people are appreciating that.
Great. Ian, tell the listeners how also they can learn more about you, or maybe say that website again so they know exactly where to go to.
Sure. So the website is called therealestatecrowdfundingreview.com. And there's a contact me page, or people can go to Ian Ippolito on LinkedIn. You can contact me there too as well.
Great. Ian, thank you so much for your time being on the show today. I really appreciate that. And I appreciate the listeners being with us today. I also hope you all will go to LifeBridge Capital and connect with me, and also go to the Facebook group where we can all learn and grow our businesses together. And we will talk to each of you tomorrow.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.